Just creating a new short.
Am I good? Oh. Hello, everybody, and welcome to our YouTube Live special presentation of the Hot Stock panel for April. Explosive stocks looking to rebound. Glad to have you here. My name is Glenn Tompkins, Senior Instructor here at VectorVest. I will be your host for the next 2.5 days. No, don't worry about it. It's not going to be that long. All right. It may feel that way, as Jim says. As you can see here, I've got my esteemed colleagues, Steve Chappell, Patrick France, and Jim Penna. As you can see, we are exercising social distancing as we're doing the panel this afternoon as well. All right, so the stream is all about the hot stocks for the month of April that are hopefully going to be looking to rebound. You're going to have 4 different perspectives to look at about 10 different stocks. As I mentioned, who's here today? And if you're new to this, we'd like for you to subscribe to our page. Right below this video that you're seeing live, you should see a big old red subscribe button. If it ain't red, that means you're already subscribed. You're good to go. So the hot stock panel is ready to go. Hopefully you're ready to go. If you've got comments, we can read the comments on the screen. All 4 of us can. So, and Jay, don't say anything bad and scare people away. I just want you to know that ahead of time. Just don't do it or else I'll put you in timeout. So with that all being said, we will have a giveaway this afternoon. We're going to give away a free VectorVest mug. The cutoff is going to be at 2:45. And Joey, do I need to do it now? Yes, sir. All right, so the key word to get the mug, you're going to have to type mug in the room. You're going to have to type mug in the room, and I'm going to watch the chat just go ballistically crazy, but you have to type mug in the room, and by the end of the presentation, we will find someone who typed the keyword mug, and you will get a free VectorVest mug. So with that all being said, either we have a real big delay or you guys are not listening. So one of the two, but one person put in mug, there you go. So as the time goes along, you have up to 2:45 before the cutoff time, and there we go. So with that being said, there we go. Wow, all right. We got a lot of people in here, and you can all see each other's type. So as I mentioned, all of the people that are sitting here, we're gonna start with me. My name is Glenn Tompkins, Senior Instructor here. I've been with VectorVest for about 16 years. So I am in the education department. I am in the education department as well. All 4 of us are, and we carry out a lot of different duties within that department, as each one of us will tell you. I have a lot to do with the Jockey Club along with Steve Chappell. I have Trending Thursday on YouTube here every Thursday. I also have Training Tuesday every Tuesday, excuse me, at 2 p.m. And I have the Derby weekly series also every Monday at 2 o'clock. So I'm involved a lot with videos, whether they're live stream or audio based. First thing we're going to do, we're going to start with our watch list of stocks. Here are our watch list of stocks that we're going to cover today. And each one of us has picks. Steve and Patrick both have 3 picks, and Jim and myself both have 2 picks to comprise a list of 10 stocks. And here they all are, and we're going to start off with a couple of mine, which, excuse me, which happen to be at the top of the list. And this list is sorted by our master indicator, VST. All right, just so happens that a lot of the stocks that we're looking at have VSTs above 1, which is not half bad, especially in this market as well. And as someone said, you're absolutely right, Jay. In the background, who's making us all look good in the background is Joey. Say hi, Joey. Hi. He's my producer, but he's producing this as well.
That's no easy task.
That is no easy task to do what Joey does. So thank you, Jay. I appreciate that. And Joey appreciates that too, because when I don't do it, he gets mad at me. So with that being said, here's all 10 stocks. We're going to start off with my first 2 picks, which happen to be REGN and VRTX. Both of them happen to be biopharmaceutical companies, especially in this day and time with the COVID-19. Thank you, Dan. Especially with this time with the COVID-19, these kinds of stocks are playing a big role in the market. As you can see today, They are both down. One of them is undervalued, and that is Regen. Vertex is a little bit overvalued. But looking at our fundamental indicators and technical indicator in RT, they all across the board have values above the value of 1, which makes them all favorable. They are buy recommendations. And another thing that I liked about them is that they are both growing their earnings at a clip of double-digit numbers as well. All right, now what we're going to do is start to go into those graphs. My first pick was VRTX. Now, keeping in mind what, as I mentioned, what's going on in the market, pharmaceutical stocks, and this is about explosive stocks this week, right? Well, I took a little bit of the low-lying fruit with the VSTs above the value of 1 to show you the stocks that even through the COVID-19 debacle that we have, or better word, pandemic, what it really is, these stocks didn't feel the full brunt of the pull down because they are in that space of the biomedicals. And I've got a 20-day exponential moving average, which will help to place the trade, get in at the right time. I'm also using support and resistance. Currently, today's price of VRTX over the last 2 days is pulled back, but coming to a level of support, which I would use as a means to say, if I own the stock right now, just hold off on it, let it be. If the stock's price breaks down below the 20-day moving average or that level of support, probably a good reason to pull it off. I also like the earnings. The earnings over this whole time period definitely moving higher on a 6-month basis from the lower left to the upper right, steadily moving higher. Earnings is the engine that drives the stock's price higher. Now, also understanding what's going on, earnings probably will be affected somewhere down the line, but I'll talk about that, or we'll look at that when the time comes. But if I'm looking to get into it right now as a rebounding stock, I'd wait to see if the stock can bounce off of this level of support and then let it take out that high as a means to getting in. But overall, over the last 6 months, the stock has had more of an upward move than a downward move as a good opportunity to get into the stock and hold on to the stock. And I love the earnings per share. All right, with that all being said, Steve, you have any feedback on it?
Well, I like your commentary around the stock. Obviously, it has been resilient. Therefore, I'm not sure how much upside is there. I think would be the kind of the give and take there. When we look at the current price action, I'm finding some comfort in that it seems to be responsive to the support line that you have drawn. I think that area is a little cloudy though, so I would definitely wait, as you suggested. I think the best thing to do to cope with what I see there is to wait for it to get back towards the highs, I think. But it could very well begin to bounce off of today's action, so maybe even a higher open tomorrow, and you could start nibbling at VRTX.
Excellent, thank you. Patrick or Jim? Or Patrick and Jim?
Go ahead, Patrick.
I think it looks good.
Well, thank you for that detailed commentary, Patrick. Jim?
I don't really have anything back.
Wow, that's awesome.
I'll just comment quickly. I agree with what Steve said. I like the idea that, that support, if it can hold that. I don't know what those increments are there. That might be a big move at that price of a stock to get to the high.
Right.
I can't really see it from. They stuck me in the back, so I can't even see the comments on the thing. So
I can't either.
I'm the old man, and I feel like I'm in high school again. But I'm the old man in the back. But I do like the fact it holds support. What I also like, Glenn, I don't know if you mentioned it, but Glenn's, and he will.
I will
show you. But the relative safety on the stock, just based on where the stock comes from, it happens to be found in the ruler stock search, gives me a lot more confidence. Again, oftentimes I'm looking at it from a longer term, but I like the relative safety of it for sure.
Excellent. All right, I'm going to move into my next stock. And the question came up is, what stock are we looking at? If you look in the middle of the screen, it tells you what the stock is, and it also tells you what industry the stock is in. So it's VRTX, which is Vertex Pharmaceutical. It's in the drug, biomedical, genetic industry. My next stock in this case is going to be another one, REGN, Regeneron. Yeah, that. Regeneron, also in the same space. Thank you, Steve.
You're welcome.
Stock, again, in the same midst of the COVID-19 pandemic, definitely moving from the bottom left to the top right. I am looking at a 6-month graph. There's my 20-day exponential moving average. Notice that this is a second stock that has also responded to a level of support, bounced off support, hit a new high, came back down, went below the 20-day exponential moving average, tested that level of support, did not break down below, and definitely looks like it's got an opportunity to go up. But as it's going up, attacking that level of the high, which is a new level of resistance, the bars are getting smaller. That could be market sentiment, could be changing on the stock, but I am looking at the two things. Looking at the 20-day exponential moving average along with that level of support as a means to help me to guide through that stock. But from an explosive standpoint or a continuing upward move, the graph is the story. It is the dinner. Oh, the DNA. It's the DNA of the stock. The graph is bottom left, top right, a little topsy-turviosity. That is a Glenism. Yes, it is. A little jaggicity as well, a little bit more volatile, but definitely above. Earnings still looks good. And if the market continues to move higher, hopefully this will. Definitely want to see it take out that high. But this does concern me a little bit in that we've got a little bit of doji action going on. Not a whole bunch of move on the open and close, but a lot of move up and down with the wicks. So I'll keep my eye on that. All right, Steve.
All right, so for anybody that's new, jaggicity generally refers to a channeling stock that's moving sideways. That's got some, pretty good pivots, both swing lows and swing highs.
Pivot.
What you're struggling with is the high side of the channel right now. One of the reasons that I do like the pick, it's a great stock overall. But on the other side of the spectrum, they're very much in the coronavirus conversation. And one of the leaders in terms of a potential vaccine in the future. So, not only are you getting a great caliber stock that's been very resilient, you have that to potentially look forward to as well. I would definitely wait for the break of the high here at this stage, or wait for a pullback back to where you've already stopped 3 times before. Because if it doesn't break north, it's going to go there, right? And that'll give you your next great buying opportunity on regen. Based on what I see here so far, I'm waiting for the pullback to that support line.
All right, Patrick.
I mean, just shows, like you talked about, the doji is forming over the last few days, shows a lot of weakness at that high, not a lot of confidence, that people are going to break through that resistance right there. You have a triple top essentially from that point. And, as we talk about, support and resistance is the ultimate crowd mentality indicator. And if you can't break those highs, the crowd shows that we don't have a lot of confidence that it's going to continue to move up more. So that's the only thing I see that I'd be worried about right now.
Jim.
Yeah, same thing. I would just put a buy stop, right? And just buy it above that high and leave it there.
Yep.
The other great thing, high RS, look at those earnings per share. Another high RS stock, another ruler stock. So in that sense, I love it.
As Jim was talking, these two stocks were found in a search. I'm going to go to the Unisearch real quick. Was found in a search within the searches prudent folder. And this is the search that was run, ruler stocks. VRTX is the #1 stock in that search, sorted by RS times GRT, which is earnings growth rate. And further down the list, there is RGen. So I know that this is explosive rebounding stocks, but I did take advantage of the stocks that were currently making money in the market because it makes sense. These two stocks could be.
That's a different stock, by the way.
Which one? You're right. There it is. REGN. Thank you, Steve.
You're welcome.
All right, but nonetheless, they're in a good search, and I stepped out of the fray for a little bit to go with the low-lying fruit in what was already moving, even in this volatile market, to find the two stocks on my two candidates that we went with. All right.
And then Paul made a comment, isn't that a head and shoulders pattern when looking at your stock too?
No.
Yeah, I don't know how to read head and shoulders. I ain't gonna lie.
So it's not exactly,
Cup and
but
handle,
you have the neckline being that support line. You have the left shoulder right there. You have the new hive being the head. This could be possibly forming it, but not. It's not the most pretty, but it's a rough Rough version of one.
I would rather to look at it, if I'm looking at it from that perspective, is probably the triple top more so than the head and shoulders.
Yeah, but if it breaks that support, that's just more confirmation, essentially,
All right.
that a downward move could come in. A bigger downward move could come in, too.
So we'll
Hence,
see.
hence the beauty of the buy stop.
Yep.
Joanne, where's that at, Joey? I missed. Oh, show the horizontal buy, hold, sell in the top of the chart, please. There we go. I can put in the recommendations. And the stock over the last 6 months has been a hold or a buy for the last 6 months, even with all of the volatility in the market. But keep in mind the space that it's in. Keep in mind the space that it's in. It makes sense that both of those stocks should be a little bit more resilient than a lot of other stocks because of the space that they're in. All right? With that, I'm going to go back to the viewers tab. And again, we're going to start off with, or kick in with Steve's picks, which are also in this list. And Steve, take it away.
All right. Well, let's make it easier. Click on percent price change. And real quick, just as a fairly swift introduction, my name is Steve Chappell. I am the Director now of Trading Systems Development here at VectorVest. So a lot of the model portfolios and different kinds of trading systems that you see offered by way of our service have been, or at least had some input from me. Todd Schaefer here as well does yeoman's work, in that regard. But that's kind of my new classification here, is working on new great trading systems that we can put in your hands. On top of that, I do teach the Derby with Glenn. We have a trading room that we do every morning called the Jockey Club. We always have very creative language and terms here at VectorVest. But the Derby is built after the spirit of a horse race. What it does is it takes a lot of the strategies like Glenn showed earlier, say ruler stocks, and it pits them up against all the strategies in VectorVest, because one of the most common questions we ever received from any subscriber at any event was, you guys have all these strategies, they'll pull you over the corner, come over here. What's the best one? What's the holy grail? So the Derby is built to address that, and do it in a scientific way. And there's lots of applications in that regard, and I don't want to spend a lot of time teaching Derby, I suppose. But it was built under that, for that purpose. And so what we do is every day we get together and we look at great trading opportunities by way of either buying complete strategies of stocks or even cherry picking some of the top performers. And it's just a lot of fun. There's a lot of Jockey Club members, I think, in the chat right now, as a matter of fact. So it's a lively bunch. There's some banter, some interaction back and forth. But that's just one of the many things. I've taught every course that we've ever offered, and I'll just kind of leave it at that. So I've been here almost 2 decades. Okay, so the reason I had Glenn click on percent price change, it put my 3 right at the top, made it easy. And Enphase is the top listed stock there. And if anybody has spent any amount of time around me for the last 3 years, you'll know I'm a big proponent of these guys, because I started buying it myself back in February of last year. Okay, and a lot of other folks did as a result of that, because we found it in the Jockey Club. Remember that?
Yes, I do.
Okay, so as you work your way across there, obviously the price is pretty attractive, coming in at only $37 a share. It is a touch overvalued because you're going to pay a premium for Enphase at this point. Why are you going to pay a premium for Enphase at this point? Because they've had 3 record quarters in a row. One of the things that I found interesting in this last piece of legislation that went through in terms of relief is there's a lot of solar tax credits involved with that, and I think that makes things even more attractive for entities dealing in the solar space. So I think that only adds to the potential for this stock, certainly for the long term. Now, because they're trading at a premium does not mean that they can't go higher, and they likely will. I mean, if the market continues to rally, I think this stock will be poised to be one of the strongest runners. In fact, they were up about 18%. Was it yesterday or the day before?
I believe so.
So there are big buyers there in big ways, even right now. You can see they're up about 6% today. It has the highest RV score of any stock on the list. So what that means is it's got the strongest upside potential of any of the different runners that we have here on this page. Okay, and again, that's a 1 to 3 year time horizon. So it's not just for the short term here and now, but where they're likely to be headed for the next while. So 3 record quarters in a row, that'll start to move that needle on that indicator quite a bit. They do come in with improving safety. It's still a little bit lower on the scale with RS. Remember, these indicators are 0 to 2. However, they're beginning to establish a bit of a track record at this point. And so I like that combination. It's more of an aggressive combination. So, if you're looking for a stock that can really move for you, assuming the market continues to rally here, which may be a big assumption, this could be one of your strongest runners, is what those 2 numbers are implying. The great news, even better, is it hasn't taken off quite yet. Relative timing is coming in just below 1. As it crosses above 1, what does that mean, Glenn?
It means that the stock is in an uptrend, Steve.
There you go. So we're about to hit potential uptrend here, or the beginning of one. And so it's still carrying a hold recommendation, but let's look at the chart on end phase. All right, so we'll get there in a sec. There we go. All right, perfect. So obviously, as with many stocks, particularly high growth stocks that have shot up and trade at premiums, there's been some considerable downside action on price. You can see the drop coming off the double top there. And what's encouraging with what's happening now, is you're beginning to see, a lot like the stock market itself, you're beginning to see a higher low action. You're also then seeing price butting right up against prior swing high resistance. And so as a trader, looking to take advantage of what can be some explosive growth potential in the share price, I would say a break above, certainly the 2 upper wicks back there. I don't necessarily like to focus on the wicks as much as the opens and closes of candles, however, is how I've been classically trained. So I do think we're kind of butting up right against resistance now. I would say with a higher stock market tomorrow and a higher open on the stock, it looks pretty attractive at these levels. Your expectation would be, if it's trading right now on forward earnings that is even higher than it was when it hit its peak, the expectation would be, at least in the future, and I'm talking about we got years and years to invest, right? It can certainly get back to those levels if the market will allow for it. So I'm with Jim. I love the buy stop order. I've become less and less of a fan of the limit, but more of a fan of just the pure buy stop order. And I'd put it right above, either the close today by about 12.5 cents, or if you feel more comfortable, the highs of the wicks from the prior swing high, because there's plenty of room to run and there's no reason to rush into a trade. So I'm the long-winded one. I'm going to stop there. There's always more for me to say, but I think I'll just let the guys do the talking now. So
I'll start. Couple of things I like about the stock. 20-day exponential moving average, stock's coming off a low. Moving higher, as Steve mentioned, higher lows. Stock is trending higher. Doesn't have higher highs yet, it'll come. But it is exhibiting higher lows. Above the 20-day, right at resistance. Patrick said crowd mentality. I love the earnings per share. And he's right. Once it breaks above there, what's this next price? Sitting at about 60. Is it 60? Oh, heck, I can't read that. Well, at that price right there, that level of a high, you got some really good upside potential. The stock is bouncing between a sell and a hold, but as it keeps moving higher, hopefully it goes from a hold to a buy. How about being able to ride a stock from a low point up all the way up to a buy and possibly taking out that recent high? That's a great opportunity for an explosive stock. Patrick?
I'd have to see it get confirmation. Back earlier, or the end of last year when they had earnings announcement, you had a similar pattern. It never broke out to the new high and then dropped after the earnings, even though they had a good earnings report. So yeah, I'd have to see it to believe it before I jump on board.
Well, the big green candle is the day after the earnings report.
Yeah, but I'm talking about the
Sure
report
is.
the time before, not that report, the one end of last year.
Here?
Yeah.
That's it. But the stock still, I'm
It
I'm
came
with
back,
Steve.
yeah.
It sure did. Not only did it come back, it blared back to hit a new high coming into, and then after that earnings, it took up. Why is this happening? Well, what's going on in the market? That's exactly what's going on with the stock. But the stock's earnings is the engine that drives the stock's price higher. You can't deny that over the last 6 months, earnings is definitely moving higher. I'm with that. So I like the pick. And, this is everybody's opinion. I'm totally on board with that.
Yeah, sure.
But the earnings kicked in. The stock went up. COVID-19 helped to pull it back down. But even with that, I like that it's still moving up.
Yeah, I listen. I agree. I think, as Steve mentioned, it's the quality of the company. It's what the company does. It's looking at earnings. It always comes down to buying it at the right time. Breaks through that support, you've got a nice level above it.
Or resistance?
You can't argue. Right? What I say, support. I meant resistance. Breaks through that resistance, and the sellers are out of the way. It's a great company, and just buy it at the right time, which would mean above that resistance.
All right. You ready for your next stock?
Sure.
Excellent. Next stock for you is?
Qorvo. Let's just go to like a 6-month chart here. We don't need all the data per
Gotcha.
se.
That's not Jose Cuervo.
No.
Oh,
yeah,
okay.
no,
I just wanted to be sure. 'cause
Wow, I
that
don't
was
know
my
where
new
your
favorite
mind
stock
is.
If it was.
Oh my goodness. All right.
The
my new favorite stock.
The commentary from the peanut gas. I can't see these guys behind me, so who knows what the heck they're doing,
That would be my new favorite.
But no, it's not Jose Cuervo.
All right.
Although, maybe we should look at that next.
Wow, boy, we got to
No.
keep it going.
No, I like Qorvo. This is a 5G stock here, and I'm not going to get into all the details. I'm going to try to keep things fairly down to the nitty gritty on the chart, because I'm going to be talking about a new swing trading course that we've got coming out. And from a swing trading perspective here, again, I like what I see. I even like it more after today's action. We are finally, we're beginning to achieve yet another higher price today, and we're finishing strong on the day. By the way, the Fed minutes just came out not long ago. Is the market still pushing here?
We can check that real quick if you want.
Check it real quick.
636.
Yeah. Okay. Cool. So let's go back to the chart. Yeah. So here again, wherever the high is today, I put a buy stop order, several cents to 12.5 cents above that high, and I'm happy to invest in Qorvo for the future. But even as a swing trade, it sets up very nicely. You have the emergence of uptrend, there's no resistance at this point. Other than we're still kind of in the gap. I don't love that. We're in a little bit of gap action from the descent. But with the higher open, I think it remedies some of that concern. And I'll just leave it at the RT is getting ready to cross above 1, so the emergence of uptrend, by the way VectorVest defines it, is also in play, and I'll leave it there.
Patrick.
I like the higher RT, confirming the higher low in price, breaking above the, what is that, the 20-day?
It's 20-day exponential.
Yeah, a lot of upside potential with that one.
Jim?
Yeah, the same way. Looking at a relative timing that's rising, new highs. Obviously, listen, that drawdown from that recent high is, we know why that happened. So a good quality stock has got every reason to believe it can work its way back up. So sure.
Yeah.
I like with the last point that Steve made, RT's going above 1. That's a very good early indication. Not only that, RT is trending higher along with price trending higher. Put those two together, this is the gas behind the car right here. All right, the gas is pumping up some good high octane. The car is a Porsche and maybe taking off. It's going vroom vroom, and now it's got some good upside to that level of the high. So
yeah, and just as a final note, just to kind of continue where Patrick left off, I would continue to use the 20 as support to the trade here. You can see that it's been responsive over the last 2 sessions. The dips have bounced off the 20. And if you look back at the chart, as Glenn just started to do, all of your peaks and valleys tend to coincide with that average. So I would be looking to continue to elevate my stop here, and I'd put it just a few cents to 12.5 cents below the 20 average. All right, so we ready for the final one?
Yep. which would be Skyworks.
Then I can let you guys have all the fun. All right, so I picked Skyworks because I was going to go ahead and just pick Apple, but I felt that was probably the lowest hanging fruit of the low hanging fruit. If you're going to buy anything these days based upon market action and kind of everything that you're hearing about that's happening around the world, Apple is certainly always going to be, I think, and rightly so, at the top of just about everybody's list. But Skyworks rides their coattails. And while a lot of the information in VectorVest is not as kind to Skyworks as it has been in the past, I think just by nature of riding the coattails of Apple, you can see some pretty explosive price movement here. This was an explosive hot stock picking panel, right?
Yes.
Okay.
I was the one that stepped out of the fray. I'm the one that did.
All right. I thought I was in the wrong room for a little while. But what I'm looking at here is very much a similar story. Now, if you're wondering why all of these charts you have stock prices flirting with, in some cases breaking through prior swing high resistance and others just shallowing prior to, it's because that's what the market is doing right now. So this is an assumption, again, that we continue to see higher prices in the stock market. The only way to get off the ground in a trade, living by that standard, is to have something like VectorVest, to continue to see a green light in the price column, to continue to see the futures higher, to continue to see the stock market opening higher, and then floating the buy stop order out there, you know, and trying to catch a good fill on a stock that's likely to break prior swing high resistance, and at the end of the day, likely to give you a higher magnitude return than Apple because of the fall and the collapse. So the interesting thing here, somebody was talking about Head and Shoulders earlier. I actually did a webcast with Brian Overby over at Ally Invest. You know, he's their lead option strategist, and he does a webcast every Tuesday. The name is escaping me right now, but I did some work with him, and Skyworks was my pick short, and it was because of a Head and Shoulders pattern. So here you have left shoulder, higher peak to a head, right shoulder. And we were going to take advantage of this thing as it broke through. So draw a line from the low of the first shoulder, the armpit, to the low of the, draw a line, like a freehand.
Oh, okay.
Okay. And draw it to the next one. And the way that you trade this Head and Shoulders pattern would be when price violates the midpoint of that drawn line, which essentially coincides. You see the gap? We weren't the only ones looking at this. So as traders became aware that that was going to occur, look at how fast price followed through and dropped. Okay. So actually, it also shows you kind of change in tune. I was very bearish on this stock just a couple of months ago, and now I've changed my tune, and I give it back to you, Mr. Tompkins.
All right. So as we get ready to go into the next set of stocks, if you are new here, please subscribe to the channel. We recently reached the level of 10,000 subscribers, and we're still growing it. So don't forget to comment, like, and subscribe. Very important. That's how we get these to get better. All right. You guys support us, and we're going to continue to bring you that information. And actually, before Steve goes on, he wants to talk about something else as well.
Yeah, a couple things. One question was, can you explain buy stop order? And I think that can be useful to everybody that's in the room.
Okay.
So the buy stop order is an order that you would instruct to a broker that says, stop buying at this price or below. So in essence, it allows you to put an order out there at a certain price where you're only willing to buy a stock if it goes higher than the price you specify. So a lot of times the best way to position yourself into a trade and try to ensure that the stock is doing what you expect and follow through is to take a close or a high price for a day and put a buy stop above it, ensuring that you'll only buy the stock if it goes not only above the price that the stock closed at or the high for the day, but even a little bit more to make sure that you're getting good momentum behind you. Okay, so hopefully that clears that up. And then, yes, I do have something to talk about. Jerry D'Ambrosio and I are going to be teaching a new course here at VectorVest. And if you could go to the first page there.
The
The one that
events-
has the listing of all the courses.
There you go.
Let's point it out. So when you go to vectorvest.com/events, right, it takes you to this page here. The live events are at the very top. The second one down is called Precision Swing Trading 6-session webcast. This will be live. We're going to do a new course here. And so for benefit of you guys for being here today, what this amounts to is we're going to give you a special deal. I know Jerry just did a webcast alerting people to this new course, I think at noon today. And we're going to extend the same offer to you folks here as well. Right now on the website, there's a very special radio button that Glenn is pointing to you right now called the Buy Now bonus. This will only be up there, I can only guarantee until midnight tonight. We are going to be doing several webcasts throughout the next week or so. So it might be back up here sporadically. But I can only guarantee midnight tonight. It's another $100 off. It's $495 for the course. You're going to get Jerry and I for
6 weeks.
6 weeks for more than an hour each week. And we're going to be detailing some very, very robust swing trading methodologies. We're going to be doing some things that we haven't done yet. We're going to be looking at chart patterns, triangles, pennants, flags, along with some very popular technical analysis indicators and definable trading setups. So it's going to be a great class. I can promise you that. And if you're interested, all you got to do is go to vectorvest.com/events, click on the second one there called Precision Swing Trading. And if you didn't get your fill of me today, you're going to get a lot more there.
All right, before we move on to Patrick,
a lot of Jerry.
Skyworks, are you concerned about the earnings growth rate at -4%? I'll let Steve answer that.
What is it?
Right there.
What's the question?
On Skyworks, are you concerned about the -4 on that?
Am I concerned about the growth rate? No, not at this time for the reason mentioned. You've had a significant drop in share price, and my assumption here, and I don't think it's a big one actually, is that they're going to follow Apple. They're just going to move in higher magnitudes, okay? Because that's who they are essentially at this point. I realize they do other things, but no, I think that they will capitalize. Just like the one thing that's hard for people to understand is that when you're near a market bottom, which we still are, we're a long ways away from a confirmed up call, right? Still.
Yep.
The stocks that tend to do the best are the ones that have been the bloodiest. And so when they asked me to come on this panel and give you some hot stocks, I'm going out and I'm finding you really some great stocks that have been the bloodiest. And I'll turn it back to you.
All right. Is this different than the David Paul course? Yes. And is the buy stop the same as a contingent order? Yes. That it needs to go above that buy order that you put in. So unless it does happen, it won't trigger.
Good.
All right. Now, let's get back to the viewers. And next person up is Patrick, who will introduce himself and we'll talk about his stocks. Patrick.
All right. Hello, everyone. My name is Patrick France, Senior Instructor here at VectorVest, also known as the Mobile Man. I've been here for over 9 years, specifically been working on our mobile application over the last 3 or 4 years at least. Working, getting new functionality in place, taking a lot of the feedback that's given on the mobile app, see how we can implement that to improve on the mobile app and make it the most encompassing application for your smartphone or device out there, so everybody can use it regardless of where you're at, on the go, traveling, whatever it may be. Also, every Thursday I do a live stream on our Facebook page where we talk specifically about the mobile app, do some training on it, either highlighting a new feature that's coming out, talk about some types of trading tips using the app, lots of different topics over there. Also, if you haven't ever joined or if you're new to VectorVest, I highly recommend you head over to our Facebook page, give it a like. Also, go comment on the video. I put a question in the video for a giveaway that we'll be announcing the winner for tomorrow actually. So if you haven't already entered into the giveaway, make sure to go check out that video from last week, the live stream from last week, and get registered for that, and make sure to be live tomorrow, or be there when I'm live tomorrow, because I will be announcing the winner as well we're giving away the home study bottom fishing course. So if you want to take advantage of that, would like to try to win that, make sure to go check that out as well. All right, so I got 3 different picks here today. Whichever one you want to start with, we can start with Dollar Tree actually.
You want to look at it here or go straight to the graph?
I mean, really, the 3 picks I had today were more based on views on what's going on right now.
Okay.
You know, the fundamentals aren't really the greatest, but I feel like with what the current condition in the market is, you can see a lot of potential with these. So the first one we have here is SMPS. I was looking for, you know, some of the more beaten up stocks out of the NASDAQ, which has been relatively resilient. Also with all the news coming out of China where they're starting to, you know, take away the lockdowns, starting to get people going again. Companies and businesses are starting to open up again. You know, anywhere that has been out of the semiconductors or electronics in general have a lot of potential here. SMPS had a really good RS score, which I liked about it. You have a nice consistent earnings. You know, it is relatively flat as of the last few months, or yeah, about the last 6 months or so, but overall that shows the company's still making money. It's not going negative. You just had a breakout of the 20-day exponential moving average, which I like. You have a lot of upside back to that back to that all-time high there just a few months ago. And then the other thing I liked about this from a technical standpoint, which if anybody's ever joined into our Facebook Live sessions or you know, the Jockey Club when I'm doing that as well, you'll know I'm very technically driven. And there's an old philosophy I learned, probably one of the first philosophies I learned about technical analysis. Looking at RSI, I have a 14-day RSI on the graph, and looking at the level of 50. Whenever the RSI goes above the level of 50 for a swing trade that shows momentum starting to build, it's a great entry into it. You can check out the last run it had as well since about the middle of December. If you go highlight, and Glenn's just drawing on, go back to the middle of December there and put a date line showing when the RSI crossed above 50. As you can see, right there led up to a really, really nice run in the stock. You had a pretty big sell-off, and then all of a sudden, RSI struggled a little bit right at that 50 level, and now starting to break out. So, you know, for a short-term explosive swing trade, I like the setup. It has some good upside potential here, and I see, you know, the whole China easing off of things, even giving a bigger boost to these right now. So that was my first pick, because you have good fundamentals, a nice technical pattern with it. So yeah, that's where my first one's going to come from.
I like the pick. No, I do. I also like the 50 line because you know, George Lane is the creator of RSI, and that's, well, actually he might be stochastics, but in any event, both of those indicators function you know, approximately the same. And that's an industry thing that's pretty widely taught. So, and it's good information. I like the pick, and I like the illustration and the explanation of at least what George Lane calls flutter, which is indicative of trend. And it's good all the way around. I like the pick.
Jim?
Yeah, I agree. Again, for me, support and resistance is the key. As I've always said this as a former market maker, it's all about where are the buyers, where are the sellers, where's the order flow. You've got a stock breaking through resistance. RSI, I'm not a big technical guy other than the support and resistance, so I like that. And of course, as in a more general sense, all of these picks are going to go based on the market trend, right? You're going to still want to look at the market. If you're confident in the market, I love the pattern of this. Again, from the bottom, moving up nice. Be cautious, make sure you've got your exit strategies in place, and they're all looking good.
Yeah.
I do see a level of resistance before that high sitting here at that number that I can't read. And I want to see if that level of resistance holds or if the stock retraces back from it. I like the early move coming off the low, coupled with the stock going above the 20, tripled with the stock going above that level of resistance. That's going to be a key point for me to see if the stock is going to stop there or continue to move higher. I would just keep that in mind, that it may stop there. And if it doesn't, that's great.
You use it as a target.
My question
Oh,
would be,
you could
what-
use it now if you get in now as a target,
Yeah.
for sure.
I don't know if you guys can, what is the increment on the
I
log
don't
there to
know.
the right? I mean, that may be a big move to that resistance. I just can't see.
$20 increments. That's 140, 160s
Yeah,
up
that's
the next
20.
one.
So you're saying there's a
That's
20-point move to that next resistance level?
About
Or 10, because if
maybe
he-
10 or so, because it's 140 right now.
Okay.
So
That's still a lot of points.
that is.
No, that was
Still not a bad
my
move.
point. Yeah, is that you still got some upward momentum there before you have to worry about that resistance level.
And Steve is right. I
You
think
use it as
you
a
use it
target.
as a level of the target.
Yeah.
All right, you ready for the next one, Patrick?
yeah.
Dollar
Let's do
Tree.
it.
Somebody's already asking about Dollar Tree.
Yep.
That was
I had a feeling
Chris.
I was going to get
Chris was
some
asking.
people kind of confused with this one.
Okay.
So this one is really reminiscent to 2007, 2008. That's where this idea came from. You know, with what's going on in the news right now, with the unemployment numbers coming out, a lot of people expecting the unemployment rates to hit higher than what they were back then. You know, people are going to try to save money. They're going to be thrifty right now. This is the time where, you know, everybody's trying to budget their family's income to make sure they can provide and have everything they need. Dollar General, Dollar Tree, both of them look good. But this is the one I chose for today because, you know, I don't see the lockdown here in the U.S. easing up in the next week or two. It's definitely going to be a slow process, and a lot of people are still going to be unemployed, and it's going to be a slow process to get people back in unemployment. And so during that time frame, when people are trying to save money, these stores are going to thrive. You see that nice big pickup as well in the EPS number as of late. I liked that. Wasn't expecting that, but when I was checking them out over the last couple of days, I like seeing that. Gives an idea that maybe, you know, analysts are expecting a nice little boost here over the next 12 months. But you're also, you know, a higher low once again. You've gotten pretty beaten up over the last few months and just starting to break above the 20. So this is more of a play on, you know, the state of the economy and the state of the workforce in the country right now, more so than fundamentally driven or anything like that. So that's my second pick for the day.
it goes right in line with what we were trying to do for this panel. Finding explosive stocks to take a look at. This is one of those. Same kind of scenario, breaking up above the 20, big jump in earnings, stock moving from a hold to a sell to a hold. If it continues to moving higher, that hold is going to hold a little longer and possibly go to a buy.
I was just curious, you mentioned Dollar General. I think Dollar General is in ruler stocks right now. Just curious, I don't know if you want to take a quick look, but would have a much higher RS, I think.
I don't know what, DG?
DG, yeah. You know, so.
Dollar General is more already in the move to the upside, whereas the stock that Patrick picked was right in line with what we were trying to do. That's got a little bit more upside than Dollar General.
So Dollar General's is not exploding?
Oh!
You don't want it to,
Oh, it
that's
is.
not enough for you?
Oh, really? Really?
It's too much over?
Really?
Is it too much for you?
It's not. It's not
too
trading
good?
down here, moving up. That's what I'm saying.
Look at the earnings per share.
I don't disagree with you. I'm with
I'm
you.
just saying.
And I said that's why I said Dollar
Hey, you're
General
not
could be
allowed
another
to turn
good
around
one.
that seat.
Okay,
We're
I'm not
social
allowed to.
distancing.
I'm going to social distance. I'm not looking back at you anymore. All
And
right.
that's why I said both of them could be
I
good,
just
but I
wanted to
only
make
had
the
to. I
comparison.
only could pick one.
It's a high RS stock, that's all. That's
Yeah,
the only reason
I like the
looked
fact
at
that
it.
this is beaten down a little bit more movement possibly coming out of it, especially if more people go there. You could have a better earnings beat with the inconsistency in it.
I was just
so-
joking, Glenn. I understand. You've got the potential here for that explosion, which is
Yeah.
what we're talking about, as opposed to Dollar General. But
I mean, some people just don't like nice things.
depends
It's
what
okay,
your
Glenn.
objective is.
Oh, really? All right. And Shock, you're asking that the ticker symbol can be darker. We can set that up. We just didn't do it for this presentation. Didn't realize that it was going to be an issue. But going forward, we can make that darker, so that's not an issue. All right. Are you ready, Patrick?
Yeah, real quick, I see somebody talking about having blurry issues. So in the bottom of the video, in the bottom right-hand corner, there's a little gear. Click on that. You can change your resolution. Try doing that. Google just recently came out saying YouTube, they're dumbing it down automatically for people. Yeah. So instead of playing in higher resolution, you may be playing in a lower resolution to help with their bandwidth. Yeah. So just a little tip for everybody who's saying they're having issues with the blurriness there.
Thank you for that, Patrick. All right, and KK, it's all right. These are our picks for you guys. You guys still make the overall decision. All right, let's go to Amazon.
And yeah, this is my third pick. You know, this is more of a conservative play with this one just because of it's a FANG stock. You know, big money goes into this. You can see everybody at home or everybody being quarantined at home is buying things off Amazon to have delivered to their homes. Amazon's been taking full advantage of that there. Earnings, you know, consistently growing. Amazon is a mammoth company. Can't really go wrong with it. This is more of a safe play, just because of how big the company is, how much money they're making, and the fact that everybody that I know has an Amazon Prime account and is buying stuff, having it shipped directly to their home rather than going outside. You know, it's hard to. I was looking at all 5 of the FANG stocks, and this one just stood out the best for all out of all of them. Netflix is already a little bit too overran, in my opinion. It's gone up too much too quickly. Amazon had a pullback, but you're not still at those highs yet. You're breaking through that support. You know, it's an easy pick here for that one.
And Mark is saying thank you for your tidbit of information.
You're welcome, Mark.
All right. Anybody want to comment on this? I like Amazon. I'm a techie guy, whether it's Amazon, whether it's Google, especially whether it's Apple. I love me some Apple. But I like to pick, it's broken out of a channel, like a little channel, and it's above the 20-day. It's above the 20-day. Earnings looks good. It's got good upside.
Yeah, what it does for me is it brings back memories. I mean, when I first started here at VectorVest nearly 20 years ago, this was an example that Dr. DeLito and I used to use at all the seminars of what not to buy. You know, and that was back when Amazon never made a bloody nickel, ever. You know, they just couldn't figure it out. And it just goes to show how times can change, just like with my Skyworks example from moments ago. But, you know, getting back on track, I really like this pick. I think when all the dust settles, you know, Amazon's certainly not going anywhere, and in fact, the big is likely to get a whole lot bigger. So, you know, guys, if you haven't taken the time to do things like learn options, I think options are probably going to be very useful to the average investor in terms of trying to participate in something like an Amazon. But I would, you know, I would think that those two things in unison could be very productive for you over the years to come. Okay, so learn about leaps, learn about some different things in terms of options.
Yeah, I agree with Steve. I was actually going to mention options as well for a stock price like this. Here's all I have to say about Amazon. Jeff Bezos bought a house for $165 million a few months ago.
Yeah.
Am I going to bet against Amazon?
Actually, I can go do that if I wanted to.
Yeah. I'm not going to bet against them. So. Yeah. Great pick.
All right. Patrick, those were your other 3 stocks. Thank you for that, my friend.
You're welcome.
All right. And now, Jim, I'm going to take you back to the watch list if you want to start there. Jim has a couple of picks, and we'll go. He's going to introduce himself first, though.
Yes, thank you, Glenn. Jim Penna here. I'm the manager of retirement services here at VectorVest. I've been here just going on 14 years now. For those, I know there's a lot of familiar names, although I can barely read them from way back here in the back row. So it's good to be here. Thanks, everyone. It's funny because I'm in retirement services now. What I'm going to talk about is going to be a little different, from a little different perspective than some of the other stocks and trades that we've looked at so far. I usually do that here. For the folks who have been to the panel know that I do that. You know, I took my Series 7 in 1992. I've worked on trading desks, so I do have that trading side built in. But right now I'm going to talk from a capital preservation, a defensive type of aspect to your retirement portfolios. And so that's what I'm going to do here. So my picks that are on there, Glenn has just highlighted, are SPLV, that's an ETF, PowerShares S&P 500. It is the low volatility ETF that tracks, there's an actual index of the S&P 500 that tracks stocks with very low volatility. Why that one? Because we're in a very volatile market here. The VectorVest color guard is starting to show green lights. I think the DEW is up. By now, the MTI is probably up above 1. I'm still nervous from a retirement-minded investment idea. If I'm looking to fill a retirement portfolio, I like the idea of the SPLV, which again is the low volatility. Listen, not that it can't draw down if the market goes down, but it's going to do less so. Then there's actually an ETF for a high beta S&P stocks, but the lower volatility for the retirement-minded investor could be a great way to go. The other stock that's up, oh, and by the way, Glenn, if you could just scroll over a little to the right, not only are you still investing in the S&P 500 in a volatile market if you feel the need to go in and start to build a retirement portfolio or replace positions. If you look at the dividends there, you've got a nice yield of 2.58%. And not only that, when we go to the graph, I'll show you it actually pays a monthly dividend, so you can get some steady monthly income. The other choice up there is TLT, that is iShares. It is a treasury. It tracks it's a treasury bond ETF that looks for longer term treasury. It's a flight to safety, right? So when you see treasury yields starting to go higher, what does that mean? It means people are going back into the market. It means that people are selling treasuries. There's an inverse relationship with the price of bonds and the interest rate. So as a defensive measure, you can go in, and I talked about one or two of these a while back. They were lower priced ETFs that did much the same thing. GOVT was one of them, but I'm going to talk about TLT today. So a great long position as a defensive measure if you're looking at treasuries, if you're looking at any flight to safety. Also pays a nice dividend, 1.8% yield right now at 298. And so it is an ETF that tracks those. So, Glenn, you can go into the graphs. There's not a whole lot to talk about on the graphs. What you'll see there, just to verify what I'm trying to talk about here, I'm not going to get into all the technical analysis. Late February, things began to happen that no one in the chat room has ever seen before. In the markets, there's an uncertainty. The country is shut down. We didn't know what was going on. One flight to safety, as you can see from late February, of course with the volatility that goes with it, is a place where you can generate income in a safer spot. That's the idea behind the treasuries, the TLT. Okay, it's not a swing trade. It's not a day trade. It is more of a retirement-minded spot to put your cash. Now SPLV, if you go to that graph, you will see the volatility. It is going to move along with the S&P 500 because it's tracking stocks within there. But again, if you're looking for a little less beta, a little less volatility, it has that same look as a lot of the underlying stocks we've looked at. Off a bottom, it's trying to find its new highs and break through resistance here. So for those who are looking at the color guard and saying, maybe I want to start to step in, again, with a more prudent, conservative mindset on that, I like the SPLV, pays a dividend and gets you in maybe without the volatility. Because remember, the VIX is still over, even with this run we're having, I just happen to have it on my phone here. The VIX is still up over 43 right now. You know, when you see 10-year treasury yields move up above 1%, what does that mean? It means people are starting to sell bonds and go back into the market. Maybe a good time, again, as one position, as a defensive-minded spot. What I've done is ask Glenn to do something a little different. Glenn, if you could go into the performance graph real quick. And I just wanted to show what these type of investments that I'm talking about. I have TLT, SPLV up there. Oh, I don't have SPLV because it's mostly going to move with the S&P 500.
Okay.
That gold line there you see is the S&P 500 that Glenn is pointing at now. Right, that's the movement, and it's a negative it's a one-year graph. It's down whatever it is percentage-wise, bouncing back, but that represents the S&P 500. The purple line up top is currently set to the TLT, what I was just talking about. And you can see the relationship that it has with the S&P 500. So if you're looking for a safe haven, looking not to just go to cash, the TLT is a great way to go. And you can see the inverse relationship it's had with that. Glenn, if you take TLT off and go to the other one I have up there, which we didn't look at the graph, is the UUP up top. Another place to go in uncertainty. And this is not, it's the US dollar. That's the ETF that tracks the dollar. That's playing it to the ETF that tracks it to the upside. Again, you're not going to, it's not a huge trade. You're not going to double your money being in the dollar. I know interest rates are low, but if you look at a global view of this, the dollar is still going to be the place to go in times of weakness. And so the dollar, again, is a spot to be when you're looking for that defensive measure in a market that, let's face it, we're up today. We're still in a time of uncertainty, right? We don't know where this is going to go at this point, where these numbers are going to lead us. I'm not saying short everything. I'm not doom and gloom here. I'm saying take a small portion of your retirement portfolio and be prepared. Be in a safer spot. All of these pay a nice dividend. And then, Glenn, finally, one I didn't talk much about, and Steve may have even more to add to this, is the gold GLD.
Attaboy.
Again, you can see, you're bullish on gold, and you can see the divergence there as to the performance of the S&P. Glenn, add them all on there. It makes for a fun graph to look at. Again, you can just see the difference, a place where you can go. Again, on the right is the percentage gains over the last year versus the S&P 500. Not swing trades, not going to double on you overnight, but some good defensive measures if you're looking for safe haven in your retirement portfolio.
You know what I like about this is that Jim's perspective on these panels is always a good one without forgetting that there's other people in here besides traders. I like what he does to help the longer term investor. And looking at the S&P 500, what it's doing, and other means to make money while the S&P 500 is struggling is tantamount to growing your portfolio exponentially even in bad times. So tantamount, that's not even a Glennism. That's a good word, but I might be using it wrong. Right now, I don't care. It sounds good. Am I using it wrong? It doesn't matter. It sounds good to me. It's big. It's very bigly. If you go and look at some of these other things to overcome the market going down and your portfolio going down, I love the safeness that Jim brings to these panels from that perspective. Alternative ways to not panic and make money in the market. Bigly.
And just remember, the market's up nice today. Remember yesterday around noon, 12:30, where was the market?
Oh,
I'm using the Dow as my example. Right, we're up 900 points yesterday.
Go away, Bear. Go back in your hole.
I'm not doom and glooming here. I am really not. I'm just saying, don't blink.
All right, Carol.
Be prepared.
All right. Anybody?
I do have a lot of short positions in my own trading account.
I'm going to
Just so everybody
spear you
knows.
with my horns.
Oh,
if you
boy.
don't stop.
Yeah.
Anything else bigly about this? Patrick, what do you think?
I like the gold approach. I mean, I don't really get into too much on treasuries and all that, so I'm just going to be quiet about that one because I don't really want to, I don't have a whole lot of input on those outside of my realm of what I usually trade.
And that's kind of the idea. It's not meant to be a trade. So
Right.
that's fine. That's a perfect answer.
Don't be the Carol Baskin of the market.
Oh, don't start with that. Don't even bring that up in here. All right, Jim's got something else he wants to talk about as well. Talk about it, Jim.
Yeah, I just wanted a comment real quick. Glenn's going to go to the page. Steve talked about the course. Just for 30 seconds, I just want to remind everyone, if you want to learn more about risk management techniques, building and managing your retirement portfolio, we have a wonderful day coming up, April 17th. That's a week from Friday. We'll actually, right from this room, we're going to do a live stream of the Ultimate Retirement Solution course. It is usually the 6-week digital course. We're going to lay it out all in one day, the old-fashioned way like we used to do it. $4.95. You'll get a 1-year access to the recording. You'll get slides and a workbook. If you're so inclined, we'd love for you to join. Again, if you're self-isolating and quarantining, it'd be a great way to spend a day. And we'll talk about what we just talked about, other ways to build and manage your portfolio, how to protect your portfolio in these potentially bearish times.
All
I
right.
use that word to push buttons.
All right, and I'm watching Steve's face. That's awesome.
Sometimes I do
it's
things
priceless.
just to push buttons.
It
As
is
these
so
guys know.
priceless because you know something. I'm Switzerland. I'm in the middle. I am so in the middle when it goes to all of that. But I like the passion that these guys have, and they give their insights.
Just if you scroll up, just
Oh.
show you, that's the summary page. That'll tell you what we're going to do. Scroll up.
I'm over
And then
that.
you can hit register, and it'll get you to that page as well.
All right. Oh, yeah, that was. I'm gonna hit register. What does it look like? Oh, there's the registration, and there's the early bird. There you go.
Thank you.
You're welcome. Let's wrap it up. Everybody, thank you all for being here. Number one, Steve's picks was right in line with some really good stocks that have the potential to go up and explode. Patrick's picks, really good potential of stocks to explode. Jim's pick, a different perspective, talking about it from a long-term perspective. I love that that infuses into our group. I, on the other hand, went a little bit differently. My stocks still have the potential to go up, but Steve made a good point. You know, how much upside is still there? I'm a big fan that once a vaccine is figured out, a lot of those stocks are going to jump on board, and they're going to they have an opportunity to go up.
The bigly opportunity.
Okay, they're going to have a bigly opportunity to go up.
It's probably have some jaggicity to
And
it.
that's not going to have jaggicity in it. It's going to have some
Jagosity, remember?
Anyway, leave me alone. And David's not here, who wrote my Glenisms book. One last thing I want to talk to you guys about is we're going to be doing a financial freedom summit, May 18th, 19th, and 20th. I'll be hosting it for 3 days. 3 days, free information, folks. A free webcast for 3 days. And it's also, it's VectorVest.com/VectorVest-Summit-Details. All right, that's the link. You can register for it. Go to this page, because I ain't reading all of this. But day one, we're going to show you how to invest in your future. Day two is about swing trading. Day three, I saw some comments in there about options. We have a full day in this free summit about options trading. So for those people who are interested in options, it's going to be a free part of this 3-day online event. One other thing that I want to point out is I too am running a giveaway in the YouTube Trending Thursday. Patrick's giving away a course. I'm giving away a course. I'm giving the Options Jumpstarter course. All right, and Joey and I are going to pick a winner tomorrow for the Options Jumpstarter course. It is a free, we're giving it away to you free. It's probably about a $3 billion course, but we're going to give it away to you for, how much is that course?
$3 billion.
It's $3 billion, yeah. All right, on the Options Jumpstarter course, and we're gonna give one of them, but you have to be there for the Trending Thursday live. For Patrick's giveaway, you have to be there at his event. What is it?
11 a.m.
11 a.m.
Eastern.
11 a.m. Eastern on Facebook, on his Facebook Live, to get the giveaway as well. So both of us are giving away, of course. I want to say again, thank you to my esteemed colleagues. I've learned from all of them. Steve happens to be one of my personal mentors here, along with Mark, who is in the background as well. Those are my two mentors. Steve has taught me a lot, and I appreciate him for all that he brings to these. Don't forget, James Krupps won the mug. Thank you, Joey. James Krupps. If you're here, James, say hi. If not, I'm giving it away.
And if you haven't already hit the like button,
You got to hit the like button. I'm going to give it away. Jim is an awesome options teacher. You hear that, Jim? You don't know him up close and personal, Audrey.
Yes, I do. Audrey. I know. Thank you, Audrey.
It's James Krupp that won the mug, so thank you guys all for jumping in and typing in a mug for that. Until the next time, folks, don't forget to like, comment, and subscribe. Like, comment, and subscribe. As a quick question, how do you feel about Wall Street bets on Reddit? Listen, I don't know. I don't know, and we don't.
Never heard of them.
Exactly. One thing that we won't do, we're not going to feed into a lot of what a lot of people say and what we think. A lot of that is personal. You notice that today we stuck a lot to what goes on in the program. That's the way we roll. All right, so a lot of this is not what other people think. We want to teach you to use a software that's designed to help you make decisions, and you may or may not agree with the picks that we made. That's okay, but that's what we're here to do. So with that, folks, adios, arrivederci, ciao, au revoir, sayonara, peace.